Did you know that capital gains tax can eat up 20% of your profit when you go to sell your home? That's right. Thousands of dollars just gone when you sell your home. But what if I told you there are ways to avoid this completely legally? In this video, I'm going to show you how to keep more money in your pocket when you go to sell your home. Let's get into it. If you're new here, my name is Stephen Rotsart, and I help homeowners and investors navigate the world of real estate on a daily basis. Today, we're talking about one of the biggest concerns for homeowners when they go to sell their home: capital gains tax. Trust me, understanding it can actually save you a fortune. So let's dive in. Selling a home is supposed to be exciting. However, there's always one big elephant in the room, and most real estate agents don't even talk about it, but it's something that should be thought about and brought up front. Taxes, specifically capital gains tax. This actually is probably one of the biggest reasons that we are seeing such a diluted market when it comes to homes available on the market. And even with the most recent CNN article, boomers are not moving out of their larger homes because they're subject to capital gains tax. Now, what is capital gains tax and why or how can we even avoid it? Well, there are other ways and there's strategies to go about this, but you got to go and work from it up front. If your home has increased in value since you bought it, the IRS sees that as a profit and they're going to want their fair share of it. For example, if you bought a home for $300,000 and sell it for $500,000, you could be looking at taxes on $200,000. That's a $200,000 gain. Ouch. And you're going to have to pay taxes on that. So, but wait, you don't have to panic just yet. There are totally ways around this, and there's strategies that you can use to protect yourself. There are completely legal ways to totally reduce or eliminate your tax burden entirely. And no, it's not just for the wealthy. It's for everyday homeowners just like you and me. So let's look at this. Let's break it down as some strategies that we can use in the current marketplace to be able to sell your home and alleviate capital gains tax. So there are 3 different strategies specifically to be able to go ahead and sell your home and have zero or a limited tax exposure. So primary residence exemption is if you lived in your home for at least 2 out of the last 5 years, you can exclude up to $250,000 of profit if you're single, $500,000 if you're married and filing jointly. This is a game changer for most homeowners. However, I will tell you that sometimes is not enough, especially for our boomer community. They've lived in these homes for a number of years. They've purchased the homes for a very minimal amount, relatively speaking, to what current average sales price is. And there can be upwards of $1 million worth of exposure from a capital gains perspective. So what's another way that we can add to our what we would call a basis? Because what you bought your home for starts a basis. What can we add to our basis to actually help our capital gains exemption? Well, the second thing is you can add home improvements. Most people don't know that any cost of a major improvement on their house, like a roof, or maybe you remodeled, you added square footage, you installed a new kitchen, those all can be added back in to the basis of the purchase price of your home. What this does is it reduces your overall taxable gain that you got on the property. So make sure you save those receipts. Lastly, and the third one is a 1031 exchange. Now, this is not if it's a primary residence. You have to be selling an investment property. So if you're using the property as an investment, you can defer the capital gains tax by reinvesting the proceeds at the sale into another similar property. It's like hitting a pause button on your tax bill, for example. So what you can really do is if you have an investment property that, let's say it's a single family home and you produce rental income from it, you sell that one, you can go buy another single family home. So those are ways to avoid having a tax exposure when it comes to selling your property and limiting your capital gains tax. Now, there's other strategies that are far more advanced depending on circumstances, but those are on case-by-case basis. But these are the three main things that our clients use day in, day out to avoid capital gains tax. Most people are not aware of it. Most people don't even know that there's one additional item that also needs to be considered on the home improvement front. If you own the home in joint tenancy, the basis of the property resets. And this is where I'm dealing with a lot of my clients right now. So they've owned the home for a number of years. Maybe they bought the home for $200,000. Most recently, their spouse passed away. Well, the basis of the property resets to the day of your spouse's passing. So you get a relief and a new basis is set. So let's say that new basis is $1 million and the fair market value of it is $200,000. Well, now you're completely covered because you have a reset of basis to $1 million. You're filing single. You have a $250,000 tax exemption. You are completely in the clear for that entire taxable occurrence. So these are things and strategies that we use for our clients on a daily basis to make sure that they can go ahead and execute what they're trying to do, which most, especially in our boomer community, they're either moving to another state, moving closer to family, maybe they're even downsizing. But these are all avenues and ways and strategies that we use for them to make sure that they can execute what they're trying to do with their real estate. The other thing is that probably what we see on a regular basis, and this needs to be an open dialogue and a start of a conversation in advance, is that you have to plan ahead. Most people do not plan ahead. I can tell you that right now. We meet people all the time that are coming to us after the fact, and they've opened up an escrow, they're selling their property, and then all of a sudden they get this form. This is in the state of California where I practice real estate. This is a 593 form. This is issued by the Franchise Tax Board for the state of California, and it has to do with the sale of real estate and the gain on that real estate. And this form actually has some very specific things. So this is a real estate withholding statement, and if you had a gain on the property, they're going to walk you through a series of questions to analyze your tax exposure with regards to capital gains. And one of those things is whether or not it was your primary residence, but then it gets into very specific things. So if you had exposure, they have alternate withholding that they will actually execute right in escrow. So you will not be able to receive those funds. So this is something that's done in the state of California where the escrow company actually withholds funds from the proceeds and actually sends them to the Franchise Tax Board directly. Then you actually have to file your taxes and then actually go ahead and work through with your CPA or your tax filer the specifics of the sale of that particular piece of real estate. All in all, there are so many strategies that can take place, but most people don't know and don't understand that you actually do have an exemption if you're selling a piece of property and it was your primary residence. That is probably the primary one that I really want to get across in this video today so that you are prepared and you are well educated when it comes to selling your property, if you even have to. There are other ways also that to protect yourself if you don't want to sell the property and turn it into a rental. Every single person's scenario is always going to be different. So make sure you're working with a professional that understands strategies to be able to protect your real estate portfolio. And that's really what you're doing. So I hope you got some value out of this. If you have questions specifically with regards to your scenario, go ahead, send me a message or leave it in the comments down below if you want me to expand on a specific topic, and I'd be happy to elaborate on some of the other additional strategies that our clients use specific to your comments. So again, I hope you got some value out of this. Make sure you like and subscribe so that way that you can get notified of the next video on this channel. We'll see you on the next one.